In this example, we're going to be looking at Chapter 7, 8A, where we're going to be preparing a bank reconciliation and then doing the related journal entries. So in your textbook, I'd like for you to find 7-8A and kind of follow along with me. It gives us a list of information. It gives us our beginning balances of our checking account and then the beginning balances of what the bank says and what our checkbook says. And after going through the process, we have kind of find out that we have some deposit in transits, which a deposit in transit means that we've made the deposit but the bank doesn't have it recorded yet. We have some outstanding checks, which means we wrote checks, subtracted them out of our checkbook, but they haven't cleared the bank yet. We had an ATM withdrawal that we forgot to record. The bank charged us some money. We had an NSF check, which is a return deposited item. And then we had an error on the check. So we're taking all the information and going through this. We know that deposit in transits and outstanding checks both affect the bank statement balance. An unrecorded ATM withdrawal, service charge, NSF check, and an error all affect the checkbook. So we're breaking it up into that category. So it tells us that as of October 31st, we open our bank statement and it says that we have $5,217 in it, but our checkbook says we have $5,718. So the purpose of a bank reconciliation is to make sure that these match. So the first thing that we do is we add our deposits in transit. So we had a deposit of $210 and $406 for a total of $616. Now when we made those deposits, we already added those to the checkbook. So those are already figured into that total, and now we need to figure them into the total of what the bank actually says we have. Then we wrote some checks, and when you write a check, you automatically subtract it out of your checkbook. So those are already figured into our checkbook, but now we need to figure them in the actual bank statement so we can make things match. So we're going to add up all of our checks, subtract them, and it gives us an adjusted bank balance of $5,023. And so we still don't match. We have the $5,023, and then we have our beginning balance of $5,718. So then we add our items first, and we have an error on check number 1754 in the amount of $18. It said the checkbook shows it was written for $75, so we subtracted $75 out originally, but the bank only took $57 out of our account, so we need to add that $18 difference back in. Then we need to go ahead and subtract out our $200 ATM withdrawal, subtract out the service charge the bank charged us, and we need to subtract out that return deposit item that a customer gave us. That was bad. So we're going to add in and then subtract all this out, and then we end up matching 5,023, 5,023. Then the problem wants us to record journal entries. So keep in mind that journal entries are only done for the items that actually affect the cash account. And the items that affect the cash account are anything that have to do with our book balance. Okay? So we had an error in our checkbook. Remember, we originally subtracted out 75, but we should have only subtracted out 57. So now we're going to add that 18 back in. And it's put 180 instead of 18. Okay, so that's $18. All right. Then we had a recorded ATM withdrawal. That would just be like if we would have recorded in the beginning, we would have debited, drawing, and credit cash. It's just like anytime you say the owner withdrew cash. The miscellaneous expenses for our bank service charge, and you'll notice that all of these, the cash account is affected. So miscellaneous expense, but then we're crediting cash because they took money out. We spent money. On the last one, the NSF check, the return deposited item, we have to take that out of our cash account because we don't actually have the money that the customer paid us, but they still owe us. We still want to get the money from them, so we're going to debit accounts receivable.